So over the long term, I always believe fundamentals lift stocks to where they're supposed to be or not supposed to be, right? But that journey is always interrupted by things that just can't be found on income statements or balance sheets. Now, these periods of time when the bipolar nature of investors drive the market, fundamentals, it really, listen, more than fundamentals, it poses a threat to you. You may buy too high, you might buy too low, or you may sell at the wrong time. That's why I like to incorporate charts as a guide. Technical analysis obviously can be complicated in and of itself, but there are some approaches that work better than others. My next guest has an amazing track record using anchored VWAP, volume average price. Joining me now, Alphatrends CEO Brian Shannon. Hey, Brian, first and foremost, I want to ask you, why is technical analysis so effective?
Well, technical analysis, Charles, shows us what people are doing with their money rather than what they're saying. As you just said on the prior segment with Peloton and some of these other companies, some of these CEOs are just fessing up now to, having problems. But the stock itself has been telling us for a while that there's been problems. That's why, it's down from 175 into the low teens right now. The market's a discounting mechanism, and it discounts the past and looks forward to the future. The market knew there were problems for Peloton.
What's special about anchored VWAP?
Yeah, the anchored volume weighted average price is simply the average price that the stock was transacted at over any period of time. So if we want to look at the year-to-date volume weighted average price, it'll tell us the average price weighted for volume, so the average true price that it traded at. So if we're below that volume weighted average price, it tells us the sellers are in control from that point. If we're above it, it tells us the buyers are in control. Obviously, we're below the volume weighted average price for most stocks right now in the market.
Let's do a case study, though, how your approach would have saved folks a ton of money. And let's go back, in fact, to the pain on Peloton. I've got a chart up here. We've got a few arrows. What do these arrows indicate here?
Well, the arrows, first off, where the stock came public. That's always an important measuring point, because that's the point where it began its public life and where the value is supposed to be. For the first 8 months or so, you kind of see we cross back and forth above and below that. And then, late last year, we started coming down to it and testing it with more frequency.
Right.
So as long as we were above the volume.
Right.
Yeah, as long as we're above that, that's what those two arrows are. As long as we're above it, the average participant on the long side was making money, the average short was losing money. And that ended abruptly with their earnings in November, where we saw that large candle down, and that really just put the short sellers in control, and buyers, obviously have had a very difficult time since then.
So theoretically, here might have been where you've got the sell signal. And that was, of course, when the stock was somewhere between 75 and 95. Let's talk about the overall market here then. What do you see with respect to downside? I mean, does this method show you where support may come in, or do you wait for it to turn around for certain buy signals? I know traditionally resistance becomes support, support becomes resistance. Are we in that kind of a scenario?
Yeah, well, for the S&P 500, for instance, we want to measure our volume-weighted average price from an important event. The most important event the last couple of years was the bottom that we saw from COVID in 2020. And if you look at the S&P 500 chart and put that volume-weighted average price on there, you'll see that we're still above that. That volume-weighted average price is at about 381 on the SPY, and here we are about 392, 395-ish. So we're still about 4% above that. And I don't look at it as that's a place to magically buy if we get there, but instead it's a level of interest. And as you just pointed out, that's where we start looking to shorter term timeframes to say, is there actually evidence the buyers are gaining control here? And we do that by looking at shorter term timeframes.
Okay.
I would not just stick a bid in at that level and say, here's my magic bottom.
We tighten up the range, we move closer to the screen, and maybe get our hand near the buy button, but don't go just yet. Hey, Brian, thank you so much. I appreciate it. Want to bring you back and keep this discussion going. This is very valuable for our viewers. Appreciate it. Thanks.
My pleasure. Thank you, Charles.
So coming up, should the White House put a cap on gasoline prices, folks, or maybe just unleash proven crude that's under our feet? Tweet me your thoughts. Price controls versus Drill, baby, drill. And how to invest in the most difficult of environments. We got Alicia Levine. She's going to help us out right after the break, so don't go away.
I see my red door, I must have it into black.